Ladies and gentlemen, good day, and welcome to Vertoz Ltd Q2 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjot Paviskar from Adfactors. Thank you, and over to you, sir.
Thank you. Good evening, everyone. A very warm welcome to our Q2 and H1 FY25 earnings conference call. To guide us through the results today, we have the management team of Vertoz Ltd, headed by Mr. Hiren Shah, Promoter and Managing Director, and Mr. Ashish Shah, Promoter and Director. Before we begin, I would like to state that some of these statements made in today's discussion may be forward-looking in nature. The actual results may vary as they are dependent on several external factors. We will commence the call with Mr. Hiren Shah and Mr. Ashish Shah's comment, taking you through the operational and financial performance, following which we will open the forum for Q&A. With that said, I would like to now hand over the call to Mr. Hiren Shah to share his comments. Thank you, and over to you, sir.
Thank you, and good evening, everyone. I would like to extend a very warm welcome to Vertoz's earnings conference call for the second quarter and half-year ended financial year 25. Thank you all for taking the time to join us today. We have with us Ashish Shah, Director of the company, and our investor relationship team from Adfactors. I am happy to share that our latest results reflect a remarkable quarter growth in a key financial across all our businesses. Before we delving into our quarterly performance, I would like to provide a brief overview of our company. Vertoz today is a new age tech leading player in AI-driven marketing technologies in India with a robust cloud infrastructure. We blend digital advertising, media, and monetization, what we term as a MadTech. With digital identity and cloud infrastructure are cloud tech solutions to offer cutting-edge solutions. We have emerged as a leaders in the integrated MadTech and cloud tech services, revolutionizing the global digital landscape. Since our inception in 2012, we have been instrumental in connecting advertisers and publishers through this innovative solution. Starting with our MadTech segment, we offer a suite of tools designed to optimize digital marketing efforts. Our programmatic advertising platform uses automated systems and algorithms to buy and sell ad space in real time, allowing advertisers to target their audiences precisely and maximize their ad budgets. We also provide a demand side platform, which is called DSP, that helps advertisers purchase ad inventory from multiple sources through a single interface, offering better control over targeting, bidding, and budgeting. For publishers, our supply side platform aids in managing and selling their ads inventory efficiently, helping them maximize revenue. Our data management platform, DMP, collects, analyzes, and manages data from various sources, improving marketing decisions and audience targeting for our clients. Additionally, our ad serving technology delivers and tracks ads across different channels and devices, while our analytics and reporting tools monitor campaigns performance, refine strategies based on data-driven insights. Cloud tech complements our existing MadTech media and advertising platform, creating a powerful combination. This integration positions Vertoz as the ideal partner for businesses seeking to leverage both cloud and advertising services, significantly enhancing their reach. On the cloud tech side, we provide robust cloud-based infrastructure and services that enhance scalability, efficiency for digital operations. Our cloud solution includes scalable infrastructure for deploying, managing, and expanding applications and services without the constraints of physical hardware. We offer big data solutions for managing and analyzing large volume of data, which is crucial for informed decision-making and optimizing advertising strategy. Our cloud storage and backup solutions ensure secure data storage and protection. And our cloud integration services streamline workflows by connecting various cloud-based applications and systems. We also offer custom cloud solutions tailored to specific business needs including bespoke cloud architecture and application development. Our cloud tech strategy leverages cutting-edge technologies to provide scalable and flexible solutions for our client. Our cloud-based infrastructure allows for real-time data processing and analytics, enabling clients to make data-driven decisions and improving advertising efficiency. Going forward, we continue to focus on technology and innovation and growing our business both organically and inorganically, adding new customers, increasing our wallet share with the existing customers, and expanding to new markets are the key pillars of our growth strategy. As we look forward, we are excited about the future and remain steadfast in our commitment to delivering sustained value and driving further growth. Now, I would like to hand it over to Ashish to take us through the key developments and financial performance for the second quarter and half year ended financial year 25. Ashish, over to you.
Thank you, Hiren bhai. Good evening, everyone. Vertoz is at the forefront of the retail media 3.0, optimizing data through our collaborative ad ecosystems. This initiative aims to deliver cost-efficient solutions by leveraging data and transactional insights, streamlining advertising efforts to maximize ROI for global advertisers, including corporates and media agencies. In Q2 H1 FY25, Vertoz marked several key milestones, reinforcing its position as a leader in innovative digital marketing solutions. Moving forward to our financial performance, I am happy to share that we have achieved a strong quarter growth in terms of our revenue and profits. The revenue from our operations for Q2 financial year 25 is INR 63.65 crores, which has increased by 69% compared to the last quarter Q2 FY24, which was at 37.66 crores, while our EBITDA margin for Q2 FY25 stands at 10.73%. Our profit after tax PAT for Q2 FY25 reached INR 6.57 crore, representing a remarkable 28% year-over-year increase. Coming to first half of the year, the revenue from our operations achieved for H1 FY25 is INR 123.82 crore, which is increased by 73% compared to the last year H1 FY24, which was at INR 71.57 crore. The EBITDA margin stands at 12.73%. Additionally, our profit after tax for the half year amounts to 12.30 crore, showcasing a significant year-over-year increase of 41.9%. Vertoz saw significant growth in its balance sheet. Company's net worth increased to Indian rupees 175 crore, and on September 24, while our cash in books, including investment, stands at Indian rupees 12.5 crore. Our commitment to innovations continues to reinforce our market standing and provide lasting value to our shareholders. Our primary objective is to become go-to partner for companies aiming to promote their digital presence and online capability. We have already begun to seize the vast opportunities and meet the increasing demand. As evidenced by our recent performance, we are also exploring further expansion strategy to scale our operations internationally. We expect accelerated growth in the upcoming year. We appreciate your ongoing support and for being a part of our remarkable journey. Together, we look forward to reaching even greater heights. That concludes our update, and we are now ready to open the floor for any question.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Harsh Vora from DR Choksi Finserv. Please go ahead.
Hello. Am I audible?
Yes, sir, you are.
Yeah. Hi, sir. Congratulations for the result. So I have two questions in particular. First one is if you can just throw some light on how domestic and international business has done during the quarter and how US as a market is panning out for you. Also, if you can just highlight the differences that you are observing in both the markets and if there are any new clients you have onboarded during the quarter.
Sure. Hello, Harsh. Thank you for coming. First of all, if you would like to know about a little bit on domestic and international businesses, we have roughly 80% business international and around 20% business domestic. About the US business expansion, definitely I would like to have Ashish to give comments on it. Ashish, sir, please.
I'm sorry. Am I audible? I was on mute. Harsh, it's a really good question. Thank you for the question. Yes, especially for the US as a market, I would look at as the entire North America as a whole market. We are looking to expand especially both the offerings of the MagTech and CloudTech, especially under the MagTech. The kind of business which we are doing is the representation of the Asian publishers here in the Western market is something really gearing up for our business. And especially from the cloud tech front, we are exploring various partnerships opportunities to represent those partners, especially the MSP services in the Asian market. Harsh, hope I answered your questions.
Yes, sir. If you can just highlight about the clients, if there are any new clients that you have onboarded in both the markets, the client base, if you can just highlight that.
Yeah. So especially from a client segment, like I said, there are a couple of clients which we are working towards it. So currently we are working on the likes of the banking clients, especially who are looking to exploring the Asian audiences, and similarly the automobile clients. So these are the two categories where we are getting a good exposure, especially for the Asian American audience segments.
And if you want a number point of view, Harsh, maybe we would have approximately 20 clients domestically and 30 plus clients in international market.
Got it, sir. So my second question is regarding if there is an update on your inorganic acquisition that you mentioned and what stage is this right now. And if you can just tell me about the cloud tech, how it is shaping up after our recent merger.
Sure. So for inorganic updates, we have a very strong team who is working very efficiently, and they are talking to various different companies and the opportunities which is coming on our way. With the right time, we'll definitely inform you or provide the information to the exchange about our inorganic related growth. Because we are evaluating, we are talking, we are in a kind of a model where we do business, then we do a strategic partnership, and then we think on further evaluating them to see that they can be a part of the overall group and contribute the growth. So that is related to inorganic growth. When it comes to cloud tech, Ashish, would you like to answer this?
Yeah. Sorry, actually I didn't get the question. What was the question with respect to the cloud tech, Harsh?
So in general, how is the cloud tech business shaping up after the merger as a business sector?
Yeah, definitely. So I'll give you some clarity. So the cloud tech business has been helping the foundation of the MagTech, which is your infrastructure. So definitely the cloud tech business has helped us in a two-way. One is helping our existing MagTech infrastructure business. That was the one step. And second one is with the cloud tech integration into the Vertoz group. has helped us in opening up the doors with the existing clients of the MedTech and the Cloud Tech. So it has given us the both sides the advantage. One is from the infrastructure standpoint of view for the MedTech infrastructure, which we are running on a large scale basis. And second one is helped us in terms of the various cross-sell and upsell opportunities between both the client sides.
So very quickly, a last question. If you can just highlight if there are any reasons for the fall in EBITDA and PAT margins in Q2, and the fall in PAT margins in H1 in general.
So, Harsh, look, our current focus is to expand and grow our horizons. And, as you can see the numbers, we also have increased our workforce, our people, and a lot of cost and a lot of investments are happening on that side. But, at later stage, as what we have integrated both the Cloud Tech and MedTech, our overall ARPU will average revenue per user of acquisition will definitely, acquisition cost will go down and the revenue per user will increase, and that will help us in increasing the PAT in the future. I hope this answers. Thank you.
Yes, sir. Thank you so much. That's it from me, sir. Thank you.
Thank you. Thank you so much.
Participants, you may press star and one to ask a question. Next question is from the line of Prashant Kumar from Motilal Oswal. Please go ahead. Prashant Kumar, may I request to unmute your line and go ahead with your question, please?
Hello.
Go ahead. You're audible.
Yeah. Okay. Sir, just looking at your numbers, firstly, I just wanted to understand, do we have any aspirations on our EBITDA margins? Because if I look at first half, it's about 14%. So just wanted to understand directionally if we have any aspirations on that.
Prashantji, if I'm understanding, your question is that why there is a decline in the EBITDA?
No. So I'll come to the decline. I'm saying directionally, if you look at the first half, you've done about 14% EBITDA margins, right? I'm looking at the presentation.
Yeah. First quarter, yeah, correct.
Right. So for the full year, what do you think would be our EBITDA margins? Where would we close our EBITDA margin with?
Correct. So, sure. So, see, basically, while designing the products and the profits margin of each of the solutions or structure we provide the customer, we have an internal guidelines to see that, we reach to between 8 to 12% of a PAT margin and roughly 14 to 16% of a kind of a EBITDA margin that is what is our aspiration. And we want to remain in that particular range to see that, we continuously grow, because at this moment, our major focus is on the growth and expanding our reach to the Indian market and international market. So that is the reason why this fall is there. But at the same time, we have aspiration to achieve this particular structure.
Right. So, and if you could break that in terms of how much would be margin contribution from MedTech and Cloud Tech. So in this 14%, in the 14 or 16% that you're aspiring, what would be the contribution, the blended contribution from your MedTech and Cloud Tech?
Sure. So if you look at that, the 14 to 16% is what is the blended, but definitely a MedTech service will contribute little more, but overall, both the businesses will have a similar kind of margin, because we will have a reduction in acquiring customer and the overall ARPU will be high. So for example, similar customer which is there in the MedTech sector will also require a Cloud Tech services. And the similar way, the Cloud Tech sector, they will also require a MedTech services. So if we combine at the later stage in the future, overall margin will help us to remain the similar line of that.
All right, sir. Sir, if I also look at, just coming to the P&L, if I look at your tax rate that you've been paying for the quarter or for half year has been marginal. So any particular reason, sir, or any benefit that you are, is the company accruing any kind of benefit?
No, it's not about the company is getting any kind of a benefit, but being our global structure of the businesses and subsidiaries across the globe, our overall business has been optimized, and we try and see that, what kind of contracts we are able to do at which country, which helps us to get the overall optimized tax structure, which helps us to, pay a little lower the tax than, what it is.
Right, sir, but this would really mean any kind of taxes that you're paying. So different, roughly less than a crore of the taxes.
I'm sorry, can you
I'm
repeat the
sorry,
question?
you're losing your audio. Can you speak to the handset, please?
Sorry. So I said in terms of taxes that is being paid, it is less than a crore, and your tax rate that you paid is hardly anything. It's very minuscule, sir.
No, I don't think it's a very just minuscule, but definitely in quarter to quarter, different quarter will definitely have a different, see, if you look at in few of our businesses are seasonality business. So for example, like in a few of the businesses happens in a specific continent related to their festive or festivity related timing. Okay, so sometimes it happens like we get a few contracts in a few of the countries which is a better at the tax optimization, and sometimes we have an average, if you look at average tax structure which has come in last 3 years are roughly around 19%.
All right. So I'm just looking at the numbers from the presentation. And so it's 0.62 crores, and you've had a PBT of about 13 crores, up to around 6%.
Sure. What I can do, sir, I can take this question offline and I'll have my CFO to answer you in detail exactly. I mean, how the tax, how much happened and what exactly we have paid on that.
Right. So just one last question.
Sure.
If we have to bake, few of the metrics into our projections, what, in your sense, would be those key metrics to look out for?
Key metrics to look out for?
In order to bake it into our projection. In order to bake this into our projection, what would be those key metrics? Like one you said is your ARPU. So how do you derive that? We just take looking at the revenue divided by the number of clients, or how does few of the metrics that you can put out there.
Sure. So basically, if you look at the, sorry?
Yeah. Sorry, go ahead, Hirit. Yeah, I was just trying to come in between, but yeah, please go ahead. Yeah.
So Ashish, please go ahead. Answer, please, no problem.
Yeah, no problem. So yeah, Prashant, so just to give you some understanding that how we internally calculate the KPIs or metrics within the organization. So definitely recently integrated the cloud tech business into the Vertoz portfolio. So we internally are working out the certain metrics to be presented to gives the visibility. As of now, what we are doing is the distribution between the MadTech and cloud tech business as a macro level. Gradually, we are working towards bringing certain metrics which can be around the ARPU line. So when we say the ARPU line is like the average revenue per users. For us, the kind of business where we present, there are two types of the users present. One is the partners with whom we work in this ecosystems, and second one is the direct customers. So what we are trying to bring here is like, say, we will be having a certain metrics in the coming quarters, which will give you a visibility between the average revenue per direct clients, which is my B2B business, directly working with a business. And second one is a P2B business, which is like, say, partner to partner business. So this metrics will give you much more clarity in terms of, like, say, the number of client proportionate to the increase in the number of client, how the revenue will flow, and at the same time, what is the average revenue per partner or per direct customer, which we work with. Hope this answers your question.
Yes. So just one last bookkeeping question. Your receivables have moved up quite higher. So how does the billing actually take place from billing to it's a revenue? Because you booked about roughly around 55 crores of your receivables on 125 crores of revenue. So how does this work, and why is the receivable days on the higher side?
Sure. Let me jump in here. So basically, as was Ashish has mentioned, we have a P2P and B2B business model. So when we talk about, and our majority business at this moment is on the P2P side, which is a partner to partner side. And so when we say the partner, generally on the MadTech and the cloud tech, the partners are either an ISV or a kind of an agencies which works to the brand over there. So generally with the agencies, 60 to 90 days is an average minimum timeline which they takes to do the payment, but it reaches up to 100 plus days as well. And that is the reason why these data are much higher. We have started implementing account receivable team, collection team to make sure that we try and achieve this days little lesser and improve on this particular number.
Fair enough, sir. But roughly around 100 I think 60 days it has been. 44% of it is coming from this. About 160 days is coming only, it's sitting in the receivable cycle. So that is the reason.
No, I understand. See, basically 60 days is a return date. I mean, that is a cycle which they say, but it never comes in within 60 days. So we give a leverage. And being, as you can see that on year-on-year, quarter-on-quarter, business has increased. And through that, overall data also get increased within the same fashion.
Right. Fair enough, sir. That answers my question.
Thank you so much. Thank you.
Thank you very much. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Aniket Vedka, individual investor. Please go ahead.
Thank you for the opportunity. So my first question is, what major trends are you observing in the ad tech industry, particularly with regards to this digital ad spend in your key market, and how Vertoz positioning itself within this evolving landscape? Can you throw some light on this?
Sure. Hiren, let me take up this. So definitely the factors, which is the key factors or key structure, what happening, especially in the ad tech ecosystem. Definitely, as you must be aware of it, like say Google has recently planned to not to go after the cookie deprecation. So definitely around the cookie segment is something where the people are looking at from a technology standpoint of view. Okay, and apart from that technology side, like say if you look at the deliverables or channels within this ad tech, especially the connected TV or OTT is taking up a space really heavily within the ad spends for the entire ad tech ecosystems. And apart from this, like especially another segments where we are seeing a great growth, especially around is the content marketing. So these are the few factors where we see there are the opportunities available. Again, to summarize, one is the technology front. There has been cookie has not been getting implemented. Cookie deprecation is not happening sooner. Second one is the what we call is the content marketing, and third one is around the CTV and OTT space.
Okay, so CTV, we are also working on connected TV ad spending.
Yes, that's true. Like if you have saw the show, looked at our last quarterly results, we have partnered with the largest connected TV players in the ecosystems to connect and help them to better monetize their inventory.
So, sir, how are we in terms of privacy regulation? How are we addressing the increasing with privacy regulations, particularly basically in the heavy market like EU and the US? So, in terms of compliance and maintaining the data security, what are the steps are we taking into this?
So we are fully compliant with the GDPR and TCF policies, Transparency Consent Framework. So both put together, like we are fully compliant with that. So in terms of the privacy, definitely as per the industry standards, whatever is required, we are implementing across the technology, and also similarly educating the market, the client base around it, how to go about it with respect to the privacy being taken at the first foremost in terms of any campaign execution.
Okay.
So it's primarily tied with the policies which has been present by IABs and the different bodies across the globe.
Okay, got it. And sir, one last question. Can you provide the details on this client retention rates and any new client acquisition during this quarter?
Yeah, definitely. So as Hiren Bhai earlier mentioned, like we have acquired between 20 to 30 clients between the India and international markets. So definitely the client acquisition has been increasing day by day. And with respect to the retentions, definitely the retention has been great. It's all thanks to our customer service team, which has been working heavily with respect to the making sure that the campaign deliverables or KPIs are meeting or exceeding the expectations of the clients.
Thank you so much, sir. This is from my side, and all the best for the future.
Thank you. Next question is from the line of Kashish, individual investor. Please go ahead.
Yeah, hi. Good evening, sir. I have a question here. Where does Vertoz position itself against the market leaders like E2E Network or Vertoz India in terms of digital marketing cloud infrastructure? And what is the roadmap and the anticipation of goals of Vertoz in the coming 2 or 3 years? Hello?
Hello.
So you're
Yeah, am I audible?
Yes, sir, you're audible.
So I asked, what is the roadmap of Vertoz Limited in the coming future? What is the kind of turnover we are looking to achieve? What is the revenues we are looking to achieve? And where do we position ourselves against companies like Apple India and E2E Networks?
Sure. So, if you look at, in the last call also, we have said that, we have an internal guidelines to maintain that at least we grow 30% CAGR year on year. Obviously, we have grown more than what we have promised so far, and we will try and deliver as much as possible from our side. This is about the perspective about the future growth. And when it comes to the companies which is into cloud tech and the MarTech sector, so basically whichever company which is listed in the cloud tech sector, we are also having a very strong handhold on that, and we are working very hard and adding more and more resources as well as infrastructure to reach out to that level so that, we have that particular sector can contribute to overall performance of the business.
Yeah. Sir, one more question. So in the past 1 month or 45 days, the stock prices have been eroded by more than 50%. Is there any plans by the promoters to safeguard minority shareholders in this erosion of wealth? And moreover, there is no dividend being paid out in the past few years.
Okay. So let me come with step-by-step answer to this particular question. Let me start with the second question. At this moment, our overall focus is to increase on the business and increase our overall footprint at various markets. So at this moment, our intention is to see how do we deploy more and more funds to enhancing our existing performance. And that is what reason why, we are working towards that and adding value over there. About the recent price fall, as you say, as you understand, like as a part of a global macroeconomic and geopolitical situation in the world, easing of Chinese fiscal situations and run up in the Indian stock market led to some correction at broad level of indexes, small and mid caps. The correction has been seen across the sectors, and fortunately, there was a bounce back, and the sentiment of the overall market today is better than the month back. So, overall, we are assuring our investors that there is no change in our growth numbers for the current year, and we are confident of achieving 30% CAGR growth year on year.
Sir, one last question. Whom do we see as a direct competitor of Vertoz Limited in the listed segment and the unlisted segment of the organizations in India?
Sure. Let me answer this way. First of all, we do not feel that anyone else is a competition. We ourselves is our own competitor, and we try and improve ourselves based on whatever we had done in the past. But definitely when you look at the sectors, definitely on the cloud tech sector, you can definitely see the companies like E2E Networks, on the listed space. At the same time, on a MarTech sector, you can see the companies like Apple India, who have a similar kind of a business model.
Okay. All right. And do we really need to check them with do we have a similar growth plans of the companies you mentioned?
I'm sorry, single?
I said they have humongously grown in the past. They have grown in the past space. Do we have a similar growth plans like that, these companies you mentioned?
Absolutely. See, if you look at the overall industry and overall the opportunities which we have as an Indian company or global market, the companies like us are the enabler to businesses. So what is our job is that we try and help the businesses to grow their existing profit margin. So obviously our pie is getting increased. So basically no one is eating anyone else's business, But here every day new opportunities are coming, and we are helping those businesses to enhance their overall profit margin or overall growth. So obviously we expect that there should be a significant growth in this particular sector.
All right.
Thank you. Next question is from the line of Aditya from Media Wealth. Please go ahead.
Hello, sir. Aditya.
Sure.
Sir, I just have a few questions. One is that I think you've given the revenue growth of 69% year on year, if I'm right. So what has driven this growth so high? I think it was 69%.
Sure. So overall, if you look at that, growth was driven by increased demand for cloud tech offering and strong performance in influencer-driven MarTech campaigns. So, these are the major factors. Definitely, we have also added a good, known team members from the industry, and they're also helping us to getting more better businesses.
Okay. And, sir, your top 5 clients, how much do they contribute to the revenue percentage?
So I do not have the exact number, but definitely I can get back to you. But none of our client is more than 20% of overall business.
No, the reason I asked this, assuming 1 or 2 clients may discontinue business with you, assuming that, so wouldn't it affect your revenue guidance or the revenue segment currently?
Sure. So basically, if you have heard me before, I just say we keep adding 20 to 30 clients internationally and domestic. So that is definitely going to help us. See, we cannot stop trying to go out, but at the same time, we are working hard on getting more and more new customers onboarded. So if few of the customers do not continue with us, should not impact us a lot, as being they are not contributing a huge portion of the overall business.
Okay. And how much is now AI contributing to your technology space for client servicing or getting the entire work done?
So, Ashish, I would like to...
Yeah. Let me come back here. Definitely. So AI has been implemented across both the categories of the business, which is the MadTech and Cloud Tech. So what we essentially do is, say, the whole business, the entire platforms, both the side of the platforms, AI, the MadTech and Cloud Tech platforms are powered by the AI. Okay, when we say powered by the AI, definitely the customer interactions which we do it on the platforms are powered by some portion of the conversation is powered by the AI. Similarly, in the building of the products, also we are utilizing AI heavily in terms of a building of the product lines. Okay, again, around the getting certain strategy inputs from the AI is also happening within the organization. So in a nutshell, AI is empowering the entire our business on the MadTech and Cloud Tech ecosystems. Hope this answers your questions.
And the money spent on this is from internal approvals, or how do you fund this entire AI concept with your company?
Yeah, definitely. As Hirenbhai earlier mentioned, most of the investments are happening towards within the company. When we look at it, definitely with respect to the AI side, we are doing heavily investments. But in our kind of business, we generally don't need to build the AI infrastructure, hardware infrastructure investments, but it's majorly towards the AI, utilizing the APIs of the AI infrastructure. So that's how it is helping us. So it's not too much of the investments from a AI perspective, but at the same time, definitely some sizable investments are happening around the AI.
It's in-house manageable, right, sir?
Yeah, it's completely in-house manageable as of now. Definitely, as we progress, as we continue to continue with our journey, organic as well as inorganic, definitely as the time arises, we will have some further guidance over there. But at this moment, everything is in-house.
Okay, so just one last question. As on March 24, you have a short-term borrowing of 13.9 crores. Can you shed some light exactly what kind of short-term borrowings have you incurred?
Sure. So basically, we have a borrowing. We have a facility with the bank, and we have this facilities against the FDs which we have created with the bank. So that is just working capital arrangements what we have done, or OD against FD, you could say in that way.
And this will persist for another year, or how is it like?
So it is purely depend on the business opportunities which we will get in the future. So we just want to make a strong financial structure so that that this can support our overall operation.
Okay, so thank you so much and all the best.
Thank you so much. Thank you.
Thank you. Next question is from the line of Sana Mehta, individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I just wanted to understand if, as you had mentioned earlier, that you are looking for a growth perspective. So is it through mergers and acquisitions? And if it is mergers and acquisitions, if you are looking for the growth, is there any targeted companies which you have looking forward with?
Let me answer here. So, see, definitely in this particular sector of the businesses, inorganic growth is definitely has to be there. But we are working on both the sides. We are adding a lot of workforce for our organic growth. At the same time, we have a team which is constantly scouting towards the inorganic growth opportunity, and they are keep talking to various companies and the opportunities which has come on our way. Definitely, as soon as we come to a conclusion, or we definitely inform the exchange, and through that you will be getting the information about that.
Okay, sir. Thank you.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Manoj Rajani from Rajani Family Office. Please go ahead.
Hi, good evening, sir. Very congratulations for the set of numbers. So, sir, just wanted to ask your policy or your vision towards the talent retention, as it is quite important, if I'm not wrong, for our industry and our company.
Certainly, thank you so much for this question. And as everyone understands, the people are the main assets for companies like us. That is the reason why when we have got Great Place to Work kind of award recently, and we are trying best to see that how we are able to enhance the capabilities of our existing team, at the same time trying to get the more talents to our existing structure which can help them to go further. So it is very simple thing, and on this way that we have to, for us, our people are our assets.
So the line for the participant dropped. We move on to the next participant.
Sure.
Next question is from the line of Kashish, individual investor. Please go ahead.
Hello.
Yeah, hello Kashish.
Hello. Yeah, sir, I just want to ask you, your share has dropped very, बहुत ही नीचे गिर चुके हैं. Is there any specific reason इतना downfall क्यों हुआ है?
Sir, as I said, like in my earlier, maybe if you ever heard me, so this is all purely because of the global macroeconomic and geopolitical situation in the world. If you look at the easing of Chinese fiscal situations, which has turned up in the Indian stock market, led to some correction at a broad level of indexes, small and mid caps. So, we are sure that our investors that there is no change in our growth numbers for the current year. We are confident of achieving 30% CAGR growth year on year.
No, but so still, like 50-60% of my capital has been lost, and I had a huge trust on your organization. Maybe I think you lost the trust of small investors, retail investors like me, who thought, okay, Vertoz will grow like anything and will help us to increase our capital.
Just to give you a little, if you're following us, you can see that we have actually increased number of investors than what we had earlier. So we believe that definitely investors have invested in us by looking at the growth and the perspective of this particular industry. And I assure you that we are purely focused on a business, and we want to see that we keep achieving the better growth on the business side. So far, whatever we have promised, we have done more than what we have promised, and we will try to do the similar thing in the coming time as well.
So what's your आप क्या suggest करते हैं कि should I hold your stock for long term investment or should I sell it off? I'm asking you a very, I know what to say. I cannot ask this question directly, but I'm asking a very upfront question.
Sir, I have a full trust in our company, and I'm keep working towards the growth of the company. Secondary market is not something which I can comment on. But if you like to, we have an investor relationship team who can definitely guide you about all our growths and the business prospects in the future. That is what I can do. You can definitely come down, visit our office, talk to our IR team, and and just get the glimpse of what exactly and how exactly we are growing on our business side.
Sure. Do you have any office in Noida, sir?
We just recently started office in Noida as well, Noida, Gurgaon. So definitely you can reach out to our talent acquisition team and see the positions are open. We have more than 40 plus positions are open at this moment.
Because I lost a lot of money, so hopefully you can give me a job now. I can work with Vertoz and know like how you are working, and you can give me a job. I can retain my wealth again.
Of course. Yeah, sure. So you can send your CV, and definitely our talent acquisition will look at that and get back to you on this.
Definitely. Thank you so much.
Thank you so much.
Thank you. Next question is from the line of Akash Sharma, individual investor. Please go ahead.
Hi, sir. Sir, I have a few questions. First one is related to our recent share price fall. Right. Just wanted to know what is the reason for the same? Like, is any of our large investors have sold their stake, or are there any concerns regarding sustainability of our fundamentals?
See, to answer this question, I would like to, I already said this in my earlier answer to a similar question. As a part of a global macroeconomic and geopolitical situation in the world, easing of, say, for Chinese fiscal situations, which has run up in the Indian stock market, led to some correction at broad level of all indexes, whether it is a mid cap, small, or, large cap. So the correction has been seen across the sectors, and fortunately, there was a bounce back as well in the sentiment of overall market. Today is better than the month back. But we would like to assure our investors that there is no change in our growth number for the current year. We are confident that we will be achieving, we are on the way to achieving at least 30% CAGR growth year on year. And if you look at the last comparison with the previous quarters and previous half year results and this results, you can see the significant growth in overall business.
Okay. Sir, and, just following up on this, as you have said that we have face some macroeconomic challenges, yet, we have done wonderfully to be in line with our expectations. So are there any specific cost control or operational efficiencies that we have done?
So we are constantly working and optimizing on the cost center, but at the same time, our current focus is to grow the business and expand our horizons and add up more and more markets. If you look at the overall market size, is a 6 trillion opportunity. If you compare the MarTech and the Cloud Tech as the overall opportunity. So there is a lot of scope of improvement. Definitely, at the same time, our team is very efficient and working towards the making more efficient way of cost and overall structure, which can help us in adding more and more better pack margin.
Okay, sir. Sir, and lastly, can you, give any guidance on the M&A for the upcoming year, or particularly, in new subsidiary and partnership with Loop Media?
Sure. Basically, Ashish, could that happen?
Yeah, definitely. So especially on the M&A front, definitely this has been a question multiple times on this forum. So I'll give you some perspective. So see, on the M&A front, first of all, we have two major sub-segments. The whole business model is the empowering the entire digital ecosystems. So any company present around the MadTech or a Cloud Tech helping or empowering the digital ecosystems, we are looking around it. Okay, as Hirenbhai mentioned, like there are certain M&A opportunities are there currently evaluated by our global M&A teams, which is actively working around it. So to give you some perspective, so let's look at the MadTech as a segment. So definitely there are certain components of the ecosystems which are available within the ecosystems of Vertoz Group, or which are not available in the ecosystems. So be it like something with respect to a digital advertising agency as a forefront. There could be additional something which could be around what we call the helping the existing ecosystems of our ad exchange business, helping opening up the better opportunities with the another partners. So these are the sectors which we are evaluating from the MadTech side of the business. Similarly, on the Cloud Tech front, we are evaluating certain MSPs available in the ecosystems, managed service providers for acquisition opportunity. That is what we are doing from an inorganic standpoint of view. From an organic standpoint of view, also you can see that the recent updates, we have recruited really great talent to expand our horizon within the ecosystems. So definitely we are not just only focused on the inorganic as an opportunity, but at the same time organic is also growing for us heavily. So that is the results of what we are seeing the results here. Hope this answers your question, Akash. Yeah.
Yeah, of course. Thank you very much, sir.
Thank you. Yeah.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Hiren Shah for closing comments.
Sure. Thank you. I thank the entire team of Vertoz for the untiring efforts, hard work, and dedication digitize the company forward to the various market conditions, as well as our shareholders who have trusted us. I thank all of you for participating in our conference call. Please do get in touch with our investor relation team for any further question. Thank you so much.
Thank you very much. On behalf of Vertoz Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.